Hey traders, it's Danielle. Today I wanted to do a special macro update because things have been a little bit crazy in the news as far as the market's concerned. So I thought I would just go ahead and give you a video update. So let's go ahead and start off talking about the S&P. Now there's been a lot of, talk that maybe this is a bubble because of the craziness going on Wall Street bets, on Reddit. First of all, I just have to say I do not think this is a bubble at all. I just think that it's a combination of people being home in quarantine for a very long time, with the combination of the fact, number one, I mean, you've got the COVID situation going on, right? Number one. So everybody's just a little bit crazy right now, I think. Number two, we have a work from home situation going on. More people are working from home now more than ever, okay? That means more people can trade. Number three, it is easier than ever to get stock market education online, which is evidence of you listening to me right now. And it's also easier than ever to trade online. Brokerages like Robinhood, even JP Morgan Chase, You Invest, by the way, I think that's a great one. That's the one that I use for stocks. They make it very, very easy to just go on your phone, buy a couple shares of stock. And so I think that kind of the craziness that we're seeing right now is really just a combination of all this stuff. Everybody's going to be comparing it to the .com bust, and hey, maybe I'm wrong, but I don't think so. We just got through one of, we just got through a very solid FANG earnings week. We have the S&P right now that's currently sitting on support. Yes, it has pulled back, but let me tell you about this week, okay? The week, there's really 2 weeks of FANG earnings, all right? Last week, we had Microsoft, Apple, Facebook, right? Facebook was last week, I think. You could double check that. I've been laid up sick here myself. But then this week, we're going to have even more reports coming out, okay? We've got eBay. We've got Amazon. We've got Google. So what typically happens going into what I call FANG earnings is we pretty much always see a rally going into the main earnings week. And the main earnings week is usually the one that has Microsoft, Apple, Facebook. Netflix is always first, okay? So Netflix will report right around here. Oops. And then we have Microsoft, Apple, Facebook, which is right in here. And then the week after that, we're going to have Amazon and Google, okay? So what pretty much happens every single time is the market rallies going into Netflix and into Microsoft earnings, all right? What usually happens is, depending on how Netflix goes, okay, if it goes well or goes poorly, if it goes well, then the market usually rallies even harder going into Microsoft, Apple, and Facebook, okay? If it does not go well, then it usually sells off going into the next week's earnings. Now, in this instance, if we go back and we see, all right, well, what happened with Netflix? Netflix had an amazing gap up. Gap up, nice move, really strong move here. After that, we saw a pullback, all right? So then what happened? All right, well, we had Microsoft. Look at this rally. This was after Netflix earnings, okay? Netflix earnings right here, boom. Microsoft rallied going into earnings, and Microsoft had a fantastic report, went to a new all-time high, all right? Same thing with Apple. Now, what typically happens after these big companies report is we get something that I like to call the FAANGover, right? Like a hangover, except for the FAANGover. So what happens is we have all this positive momentum and all this positive energy, and guess what? The stocks, they made new all-time highs, okay? So what has to happen after that? They have to pull back. Now, that's very normal. I wasn't really looking for it to happen until after this week, and it did happen a little bit early. But as you can see right now, today is February 1st when I'm making this video. The indexes have pulled back directly to the 50-period simple. And guess what? They're in a squeeze. And guess what? They still have positive volume. And guess what? The 50-period simple is like one of the best pullback zones that you can possibly buy on. You know why? Because I usually have my stop at the 50-period simple. So that means you're basically right on your stop loss zone. So when you're looking at the S&P here, you know, there's been all kinds of craziness in the news with GameStop and silver and everything else, and funds losing all kinds of money because they're in a short squeeze. Well, we know about the short squeeze. We trade the short squeeze all the time, right? So yes, there's been more volatility. Yes, there is a reason to be worried. You know, why? Well, because when you're sitting right on top of the 50, if you don't trigger higher, the next level to fall to is going to be the 100 simple. And that's going to be around 3,600. So when you're sitting on this level and you say, should I be concerned? Well, I mean, there is a reason to be concerned. You have price that has broken through the 50 simple. You're starting to get a moving average cross here to the downside. You have areas of the market like the transports that are starting to break down below the 50. You have this crazy move going on in silver because everybody on Reddit has now decided that they're going to try to short squeeze silver to the upside. But I mean, silver, this is something we've talked about many, many times. This is something we've been trading in the mastery, long-term hold. And we were in it because of the weekly squeeze. There's a weekly squeeze right here. This is a move that's been consolidating since, I don't know, let's see, back here in November. So that's been something that we've been building up a position in SLV and also in physical silver as well. So this is, even though, you know, the Wall Street Reddit people are the one who kind of popped it off, this was already in the making. So I'm not seeing, you know, anything like, oh, this is a sign of a bubble or anything like this. This was a setup that was ready to go anyways, and it just needed a reason. As far as GameStop is concerned, I think the whole thing is hilarious. I've been, you know, tweeting about it all the time at Trader Danielle on Twitter. But I don't think that it's going to crash the market. Yes, hedge funds lost money on the short squeeze, but, you know, we trade short squeezes all the time. Blink is another one. This one has about 30% high short interest right near the highs. You have another one right here in Plug. This is, you know, you can see the way that they just traded higher day after day after day. Or sorry, that's a weekly chart, week after week after week. So, I mean, there's short squeezes that are going on all the time. Yes, GameStop was a extreme example, and I think it's really funny. If you haven't seen it, you should go to the Reddit page and you should just read it because I think it's hilarious. But the moral of the story is when you have something like this that has an outrageous amount of high short interest, and you have people buying the stock, it's going to cause the price of the stock to go up, because when people buy, the price goes up, and when the price goes up, the short sellers lose money, and then they have to buy to cover. This situation is just a function of who is going to give up first, okay? Because the short sellers who haven't given up yet, you have to ask yourself what's going to make them give up. And if everybody on Wall Street Bets has already bought GameStop, well, there's nobody left to buy it. I mean, who's gonna keep buying it now, right? We know they bought it last week. We know they bought it the week before. Who's gonna buy it now? In order for it to go up or continue going up, more people have to buy it. And you have to ask yourself, okay, well, the Wall Street Bets people have made a lot of money on this, okay? Well, when it starts falling, they're going to sell it. Even if they're putting up billboards everywhere and, you know, this whole thing is very hilarious. they want to make money. So at some point, if this is going to stagnate, they're going to sell it because they're going to want to make their money. So this is only going to end when one side gives up. Either the funds are going to keep giving up or the Reddit people are going to keep giving up. No matter what, I think the whole thing is hilarious. I don't think it's going to break the market, but I think it's very fun to watch. The main thing that all of you need to know is what we need to watch here is the 50 simple. Okay, this is a huge make or break level. If this thing breaks to the downside, this is where we're going. I've kept my positions pretty light for the most part. I have a couple earnings trades on right now. I have a couple different trades. I was gonna add something in Plug Power. I want to be a little bit careful with those momentum stocks right now, just because if this does break down, then pretty much everything will probably go with it. But if, in fact, this starts trading higher and we trigger to the upside, you know, this is going to be a fantastic adding spot. So I'm adding a couple positions, adding a couple earnings trades, not doing anything too crazy. Watching this level really closely and just basically looking for signs that momentum is going to come back into this market. So if you look on a lower time frame chart, you know, we tried once. This is the second try. Let's keep this thing above 3,700, and as long as it stays above 3,700, I think it's going to be fine to keep trading to the upside. All right. Well, I hope you enjoyed this macro video update. Other than that, I will see you in the next episode.